Talk a little bit more about, Lillian, what you're seeing in the developer space in particular. I mean, our developers are just going to continue to limp, payment after payment here. How do you expect this to all play out?
Yeah, that's a great question, actually. So take a step back. From the macro perspective, we think that the overall sector will still give it a stable outlook. Basically, on the back of expectations of the national sales, contract sales will likely to be steady for the next 12 months and see a gradual and slow recovery in sales. For the developers, we think that the overall default risks among all the China's property developers were likely to fall in the next 12 months through mid of next year from the peak of last year. And that's actually basically because of the stabilizing operating environment and funding support at general levels from the central government to support liquidities for the developers. That will actually help the better credit qualities developers, including the large FCOEs and large POEs. And those have not really defaulted so far on the offshore and onshore capital markets. However, having said that, the financially weaker developers will likely benefit less from this improving environment as well as policy measures, and we're likely to see more consolidations and the debt solving process going on in the short term. Also, we are likely to see more selective and localized policy measures to support, mainly focusing on those unfinished projects, as well as the upgrade demand for accommodations, like what we already have seen in the weekend from the NDRC, the latest measures. So all in all, we think that price stabilization is still the overarching policy objective for this year.
So Lillian, I mean, is this a Band-Aid? I mean, what will this developer landscape look like in a couple of years from now in terms of where the companies which are doing best operate? Would they be in tier 1, tier 2 cities? And, what will happen to local governments as a result of their own funding and how they get their money ultimately?
Yeah, that's a great question. Actually, that links the key problems in the property developer with the local government and LGFVs, the local government financing vehicles problems for this year. We're closely watching these two areas problems. The land sales actually has declined as a revenue for local governments already in the past couple of months, and that actually has hurt the government's capacity to support its local government financing vehicles, which actually takes a lot of mandate on supporting local infrastructure and investment. So that actually leads to a rising risk in another area for those local government financing vehicles. So we see a rising refinancing risk at that area. Also, we see rising risk differentiations between LGFVs owned by stronger local governments versus the weaker ones. And this actually means intensifying contingent liabilities for the local governments as well as central government. So we think that the speed and spread right now actually already go beyond our expectations.